Hey everyone, this is a market update for multifamily investment properties here in Southern California. This is the summer market update. Overall, a lot of people have asked me, Dan, what's going on with the market? Tell me what's happening. I'm not active right now. I'm planning on maybe dipping my toe in the water. What can I expect? Overall, there is not a shortage of buyers in the market. There's a lot of capital on the sidelines. There's a lot of buyers that want to be acquiring assets right now. We're seeing sellers not willing to transact in today's prices, and that's really where the shortage is. There's only a finite amount of sellers, true sellers, in today's market. The market overall, it is a little bit slower. It is a little bit more sluggish. There's more days on market that's taking place. There's buyers that are out there. They are scrutinizing more things about real estate, if it's the building, if it's getting financing, if it's going through the due diligence, but there is buyers out there. There is capital closing transactions. So let's dive into that a little bit more further. What's transacting is this 4 million and under space. That's what's really flowing right now. As a team, we've closed 25 transactions year to date for multifamily properties here in Southern California, a total of right under $100 million in deal volume. We have another 13 multifamily properties in escrow that are slated to close, which is going to bump it up to about $200 million in total transaction volume will close so far as we wrap up Q3. And it's really the smaller transactions. It's this 4 million and under. It's buyers that are not as sensitive to interest rates. Maybe they're not taking out a big loan. Maybe they're getting Plex financing. The small 2 to 4 unit multifamily space has been pretty strong, pretty fluid. We're putting properties on the market. We're getting offers. We're getting those under contract at good prices right away. Those aren't dragging out too long. And then the coastal market has been very, very strong. We've seen that. We've shot some videos on that as well. Your Huntington Beach, your Costa Mesa, if we can get a property in Newport, San Clemente, within Orange County, we're seeing capital, flight to quality going into these assets. So we've also seen cap rates kind of tick up in Anaheim, Fullerton, Buena Park, Garden Grove, Westminster, and those are closer to the cost of debt. We're seeing interest rates in the high 5s to low 6s, depending on the LTV, depending on the loan amount size. But as the cap rates are inching up, the borrowers can get a little bit better LTV than they were getting just a few months ago overall. So that's now making the numbers work a little bit better. But on average, we're seeing 50% loan to values being quoted on average for assets that we take to market. And that's because interest rates are, again, close to 6, maybe a little above, maybe a little bit below, and your cap rates are in the 5s, and if it's moving into the coast, you're probably down in the 4s somewhere. And if it's a really trophy, high-profile deal right on the coast, you're probably going to see sub-4 caps, especially if there's a lot of upside in the rents. So that's kind of give you a barometer of cap rates, interest rates, kind of your loan to values, what part of the market's really trading the most. Again, that's that $1 to $4 million range. But also, there's assets that are trading in the 10, 20, $30 million space. There's not as many of them. There are less buyers out there. So if you're a buyer in today's market and maybe you haven't been actively looking, it makes sense to kind of, lean back in and see what you can get right now because there's less buyers out there. Let me give you an example. We've been manufacturing exchanges. So that's something that's really, really exciting right now where we've had relationships with investors and they've said, I'd love to maybe trade up out of my building. I'm close to being out of depreciation. I've got maybe a very little loan or my loan's coming up and I might want to do something. Well, 2 years ago, if they were to maybe exchange under that scenario, it'd be very tough to then get a seller to agree to go with a buyer like that. They've got to go sell their building first. It's not really a sure thing yet. Well, right now we've been putting transactions, not every one of them, but some of these assets that fit our investors' goals, it trades them up with their equity they have in their down leg, getting them into a better asset, maybe more units, better location, better quality product, and maybe tying them up first, getting that up leg kind of solidified a little bit, and then having runway time to go out there and sell the down legs. So we've got a few of these under contract right now where the seller's getting their price, their terms. It might be a little bit longer runway, but we've got that sorted out and they feel good about the sale of the down leg, understanding the profile of the seller, the quality of the asset, is there buyers for that real estate. But again, your manufacturing and exchange You're helping out a seller, you're helping out a buyer, trade up, you're creating an exchange within the marketplace rather than sit around and wait for an exchange buyer to call you up. That typically doesn't happen anymore. So that is some of the nuances we're seeing within the market right now that maybe not everybody's aware of. Maybe there's investors that have just decided, I'm not going to do anything, rates are high. Well, that might be the right scenario. It also might be worth looking in because we're coming up with good quality real estate that's coming to market, and you want to be ahead of it and know what's coming up. So if you want to download with us and reach out, we'd be happy to discuss. Another really important topic, we were just with the Apartment Association last week. They're talking about Prop 33, the Justice for Renters Act. This is going to be on the ballot in November. This is really, really important because this is rent control, the third iteration that they're trying to pass. The first 2 times we defeated it. This is the 3rd time. This is something as housing providers we need to take very seriously. I'll put a video out on this, but it's really important to know that there's going to be more of this kind of coming up, and you're going to be hearing about it. You're going to be hearing about Prop 33, and that's trying to put stricter rent control within California. So again, we got to get ahead of this and fight it. If you'd like more information on that, let me know. I've got some literature that I can share from the Apartment Association. And then also, if you want to talk one-on-one with anybody within our team, myself included, we're here and happy to help. We'd be happy to go over your scenario. If we can tell you, hey, look, it's a good time to trade up. Maybe it's a good time to just wait. But we'd like to get those conversations started. So if it's 3, 6, 9, 12 months down the road, when the right opportunity comes up that matches the equity, we can put something together. Thanks so much for watching, and we'll see you again soon.